Okay, good morning, good morning, good morning, good morning. How are you doing today? It's a pleasure having you here. If you can hear me, do let me know. It's a pleasure having you here. If you can hear me, do let me know. Uh, let's confirm that the audio is good to go. Okay, beautiful. I can see Solomon Musa said, hi, Tolu. Really enjoyed yesterday. Thank you. And then you said, yes, that means that the audio is good to go from your end. Thank you, thank you, thank you for that feedback. P.S. Audu, were you with us yesterday? You're welcome. If you are here for the first time, I will still do a sort of recap before we dive straight into the live market analysis, right? Where we're going to discuss a few things. So thank you for that, Mr. Solomon Musa, for your feedback. Thank you for that. And I think we have a handful of people that are yet to join us. So we'll take it slow and steady. But P.S. Audu, I hope you can hear me as well, as we're going to gradually start to steamroll. And when I say steamroll, I mean just like a train. Before that train picks up fully, it takes a little while before it, builds up that momentum. So hopefully before we build up the full momentum, we have people that have joined us and then they are not missing out on too much. Thank you. Okay, P.S. Aldo said, I was here yesterday. Wonderful lecture presentation. The audio is perfect. Good morning. Thank you to P.S. Aldo. Thank you, thank you, thank you. Before we proceed, just a quick one. Are you new? If you are new or struggling, let us know. I would like to know so that we know how we can help everybody out further, because some of us obviously are in different stages of our trading. So let us know, are you new or are you struggling? And then I'm going to start to give this presentation so that we don't take way too much of our time. Okay, thank you. Solomon Musa says struggling. Solomon Musa, how long have you been trading for? How many months or weeks or years? Let us know as well. And then we have more people joining us. We have Mr. Adams Ayambire, who is joining us here. I believe Mr. Adams is from Ghana. His audio level isn't on yet, so he won't be able to hear. Oh, okay, Mr. Solomon said years. Okay, but you didn't mention the exact amount of years, right? Is it 1 year, 2 years, 3 years, 5 years? Let us know. Okay, 5 years. Oh, wow. Mr. Solomon Musa, I think you might need to talk to your account manager under 10 Trade, or you might need to uh, move up to the next level. I know there are things that 10 Trade has to offer. It has the Telegram group and other things that you can take advantage of, mentorship, one-on-one, and so on. But let's continue, because if you've been trading for 5 years and you're still struggling, then it obviously means that you've tested a lot of things, you've tried a lot of things, but it is still not working, to your favor. So welcome everybody. It's a pleasure having you all here. We have more people joining us. Awesome, awesome. Great. So let's continue with what we have for you today. And of course, this live market analysis session is brought to you by 10 Trade. Yes, 10 Trade is the broker of choice. 10 Trade is the broker that is going to help you to become a successful trader. I'm sure just like Mr. Solomon Musa that has been trading for about 5 years, he must have used a lot of brokers. But trust me, 10 Trade is where you are going to make it, right? So let's continue with the information I have. Now, there are things that are required of everybody to do, just like we did yesterday. And I hope that we did this little task yesterday. And I hope that you sent your details to that phone number that was mentioned yesterday as well. Now, this is what we want from you, and I'm going to mention it here. You are required, please everybody pay attention to those that are just joining us. You're welcome, you're welcome. Dominion Haruna, your audio is yet, okay, the audio is back now, good, so you can hear us. So good, there are things that are required of everybody here listening to me. Please kindly note that once you do this task, 10Trade has a gift for you. Yes, 10Trade has a gift for you. The first thing we need to do is to follow 10Trade on the social media platforms, right? Follow the social media handles for 10Trade, like and comment on our post. I'm going to drop the handles here for you. I'm going to drop the handle for Instagram, Facebook, and Twitter, right? So you can as well do the needful. So that is the link. You can see the links for all of them, for Instagram, for Facebook, and for Twitter. So please do the needful, follow 10Trade on these platforms, like and comment on the post, right? And then also you need to subscribe to the YouTube channel, right? You need to also do the same thing and subscribe to the YouTube channel. Also do what? Also like a couple of videos, comment on them as well. And trust me, what 10Trade will be giving you is going to help you to improve drastically. I like the fact that for those that joined me at the very beginning, we're just a few minutes in, or those that joined me at the very beginning, just like I'm scrolling up now, Mr. Solomon Musa said, hi Tolu, really enjoyed yesterday. And then P.S. Audutu said the same thing, that it was a wonderful lecture presentation, right? And those are their own words. So that means that in just one day, you have gained so much value. This is day 2. Let's see what we can make out of day 2 as well. Trust me, by the time we finish this week together, you will be so confident in your trading compared to when you finish in a month's time. In a month's time, you will be super confident as well. So join us in the YouTube channel, like and comment. Of course, subscribe, like, and comment. And that is the YouTube channel. Please, as we're dropping the links, please, you can copy them. You can click on them to open them down, or whatever the case might be. You can write them down, do a screenshot there in the comment section. You need to do this. And as I said earlier, 10Trade is going to give you gifts. Yes, things that would help you to improve drastically in the business. And please, you also need to post the webinar advert, right? You need to post the webinar advert. And as you're posting the webinar advert on your WhatsApp status, right, you need to ensure that you are going to do a screenshot. I'm going to do a message for you that you can post on your WhatsApp status, on your Twitter, on your Facebook, and other platforms at the end of the day. So please take note of this as I drop this here. Let's encourage others to join us, right? So here it is. Okay, it is. I'm going to drop it here. So as you can see, that is the information that you can drop. Don't miss out. Join us for a live trading session with Tolu Olatunji. That's myself today by 9 a.m. This is about 10 minutes after 9, so there's still time for people to join us. Apologies also in advance once again, just in case we go over the 1 hour marker, right? So post this up and then let people join. And then this is what you're also going to do. You're going to ensure that you send screenshots, proof of all the tasks from the first one, talking about you following the social media handles. When you do that, do a screenshot to the second one of the YouTube, do the same thing, screenshot as well. And then the third one, obviously, a screenshot of you posting all of these things on your WhatsApp status, Telegram, and all. When you are doing all of this, please also ensure to add your full name. Please add your full name and your 10Trade ID, right? Your 10Trade ID, that is obviously after you have registered for an account. Now, when it comes to registering for an account, if you do not have a 10Trade account, kindly get back to the person who invited you, right? Somebody must have invited you here for this live market analysis session. Kindly get back to that person, and that person would assist you further. Please also note that this information, right, is needed, right, as it will be requested when you are called, right? The representative of 10Trade will give you a call to follow up and to assist you further at the end of the day. So please ensure that you get back to the person that invited you, and then the person will help you to register. It is very, very important. So don't forget, please send your screenshot to the number as you can see on the screen. I'm going to do what? I'm going to do copy and paste of this number so that you have it, and then you can do the needful, send your message to that number on WhatsApp, and that is the number right in front of you, right? So I have just posted the number in the comment section rather. So please do the needful, and then we can proceed accordingly, right? So don't forget, anyone who completes the task and is registered on 10Trade will be given a surprise gift, a surprise reward, right? Very key, very important. You need to improve. A quick introduction, maybe for those that were not here yesterday. My name is Tolu Olatunji, and of course, you are here under the 10Trade roof that is going to help you, the broker that's going to help you to improve in the business of trading. A lot of us have been struggling. Only Solomon Musa said he has been struggling, and said he has been struggling for about 5 years. 5 years. Is there anybody here that has been struggling for more than 5 years? Please let me know, because in my time of trading, I have met a lot of people that have been struggling for more than 5 years. Some have been struggling for 7, 9 years, and so on. So let us know in the comment section, right? So we are going to proceed now, right? So I will be handling this obviously. And a quick disclaimer for you: trading the financial markets carries a high level of risk. Please ensure that you protect your account accordingly, as you can easily lose your funds, and you can also double your funds, whatever the case might be. But when it comes to trading, account protection should be number one. I repeat, when it comes to trading, account protection should be number one. Solomon Musa said, "I'll be fine after the clarity you are providing." Awesome. Thank you for that. Thank you for that vote of confidence. That means that what we're going to be providing should help him and should help everybody else. And don't forget, you have questions, feel free to ask. Even if we go past the 1 hour marker for this session, please, apologies on behalf of myself and on behalf of 10Trade as well, right? We're going to do the needful to dish out information that we have for you. So still on this disclaimer, please also note that you are required to minimize your losses and then maximize your profit. And we'll still explain that to you some more. Now, I put this equation here for a reason. I really don't need you to answer this, but I put this here for a reason, and I want to quickly explain this, right? A lot of us have heard most of the things that we have been talking about, that we talked about yesterday, and we'll still talk about tomorrow, next week, and next month. Meaning that a lot of us have heard about the technicals, the fundamentals, support, resistance, supply, demand, RSI, MACD, Bollinger Bands, just name it. A lot of us have heard about the GDP, FOMC, NFP, just name it. But the thing now is that, just like this equation that we have right in front of us, a lot of traders are not mixing these ingredients the proper way. They're not mixing them to have the right result, right? And that is why a lot of people have been struggling. And unfortunately, that is why a lot of people are still going to struggle. It is not a cause. It is simply the fact that the same information that you are using, somebody's using and doing well with it, while others are using it and not doing well with it. So is it the information or is it the person? You would agree with me that it's the person, based on how it is being used, right? So we talked about this yesterday as well. So for those that are not here, we're breezing through this before we slide into the charts, and then we're going to discuss what we have for you today, right? So a lot of us are struggling, or you are new. That's why I asked that question much earlier, which happens to be a problem. This is the current situation of many. Please, we are less than the number from yesterday. Please do the needful, post this information, post the training, right, that is happening now. Post it on your WhatsApp status, post it on your Twitter, post it on your Facebook. Let's bump up the numbers. We are about 11 thereabout. I would like us to be 50 before the end of today. So let's see what we can do about that. Don't forget, once you do that, and you send your screenshot to that number, 10Trade has a gift for you, right? And then we'll see what we can do together, including me. I would also be involved, right? So it might as well be a mega gift that you will be receiving, right? Imagine if you had like 30 minutes or 1 hour or whatever duration with just me, where we're discussing your issues, because some of the issues some of us are having is more or less different and similar from others. Some of us might be having issues of stop loss placement. Some of us might be having issues of poor risk management, over trading, revenge trading, greed, fear, lack of patience, lack of discipline, just name it. A lot of us are having a lot of issues, right? So we're going to help ourselves out to improve. So in order for us to improve, these are the things that we are going to be working on. And we can't talk about everything in this live market analysis session because we are supposed to be focusing on the chart. But this will also be covered during the evening session, which is conducted by Mr. Toby Okunoga, right, where you'll be talking about the risk management. We talk about how to use the platform for those that are very new to the business. We talk about some things for beginner traders. So these are basically the things that you need, everybody needs in order to improve, develop a winning mentality, which happens to fall under psychology. Manage your risk, which falls under risk management, also known as money management. Develop strategy, which has to do with market analysis. Trading plan and trading journal has to do with psychology, and then avoid unnecessary losses, which has to do with psychology as well. The numbers are still low. We are 13 now. Please, we need more people. Send out that message. You know someone that is meant to be here that can benefit from this, send a message to the person, let the person join us now and learn, and then let that person grow with you. We all need to grow together. A lot is happening in the world, especially in Nigeria, our beloved country. We all know elections is around the corner. We know there's petrol scarcity, prices of goods and services, food, everything is up. So that means that we need more money. Yes, and that's why you are here, because you want to make money at the end of the day. If there is someone here that you do not want to make money, then I know you can as well maybe exit and leave, because we are here to talk about money, right? So fundamentals and technicals is going to be our focus for this session that we're having. Fundamentals and technicals is going to be our focus for this live market analysis session. And when we talk about fundamentals in a nutshell, we're talking about the news. We're talking about the news. And when we talk about technicals in a nutshell, we're talking about the charts, right? So please pay attention. Fundamentals has to do with the news, while the technicals has to do with the charts, right? And then please, everybody, write this down. If you were not here yesterday, please write this down. If you need to do a screenshot, write this down, take a picture, whatever the case might be. Excuse me, this particular slide is very, very important. I repeat, this particular slide is very, very important. We need to be able to check for the upcoming news. I'm going to show you how to do that in a bit. You need to be able to map out your charts, meaning that you need to be able to arrange your chart based on what you can see, right? What is the trend? What do you want to do in the trend? Where do you want to do what you want to do in that particular trend? So mapping out the chart simply means that you're putting up your levels, support, resistance, whatever the case might be, and then it helps your eyes further to fine-tune where you are going to be entering. And then we wait for price reaction. Yesterday we talked about the price reaction, where we said price gets to the level, and then we wait for the trigger for entry. This trigger for entry, we said yesterday, it could be the price action, candlestick patterns. It could be like the engulfings, whether it's the bullish engulfing or bearish engulfing. It could be the hammer, or also known as hammer, also known as a pin bar. So it could be the bullish hammer, bullish pin bar, bearish hammer, bearish pin bar as well. I'm going to show you how they look like in a bit, and then also how to set stop loss and set take profit. In trading or in any business, your reward must always be higher than your risk, right? The stop loss in this case is your risk, while the take profit is your reward, right? So these are the key candles. These are the majority of the candles that traders normally use, that we use, and of course it helps us to enter the market. We use it as a form of trigger. So please, you might not be able to draw this now, but you can as well do a screenshot. Yes, you can as well do a screenshot of this, and let me know when you've done that, and then I'll show you this four, because these four are the main ones, that are the very important ones that we need to concentrate on fully. Please let me know if I need to go back to that slide, and maybe you need to take a picture before I even move further the more. Please, because of time, we don't want to take much of the time. We want a situation where we hit the ground running, you understand what we're talking about, and of course, you can start to play straight. So we're encouraging everyone to play straight. Thank you, Godwin. Sammy said done. So I believe everybody should be done taking screenshots of the previous slide and also this slide. Once again, this training, for those just joining us, this training is obviously brought to you by TenTrade, the broker of choice, the broker that will help you to get to where you need to. And of course, we give out a few tasks for everybody to do. I believe we've all gotten information on the task, like the social media handles. If you haven't, let me know. I'll quickly copy them and paste again for you to see. So follow TenTrade on social media. Don't forget, not just follow, but you need to like and comment on the post for the social media handles, right? So I'm just going to do copy and paste again for everybody, just in case you didn't see that. Okay, sorry, that's a bit too fast. So the first thing that we just said now was follow the TenTrade broker on social media platforms, like and comment on the various posts that you see, and then also subscribe. You need to subscribe also to the YouTube as well. I'm going to do copy and paste as well of the YouTube channel. So you need to subscribe, like, and comment on a couple of videos. This is very, very important, and that is the YouTube link again for you. And the reason why you are doing this is so that you can get a gift, you can get a reward from TenTrade. And then also post your webinar adverts, right? This is the webinar adverts over here. You can post it on your WhatsApp status or wherever you normally frequent. Post it on your WhatsApp status, post it on your Twitter feed, post it in all these places, and ensure that you invite someone, right? Okay, great, the numbers are increasing. So that's the phone number, right? Because you're going to send your screenshot. After posting all this, you're going to send your screenshot of your proof of the task that you've done to this number that you have in front of you on the screen, and also in the comment section. Don't forget to put in your full name and your TenTrade ID, and then also please ensure that you have a trading account on that TenTrade. If you don't have one, please kindly get back to the person who invited you. This information is going to be required, going to be requested by the representative of TenTrade when he or she gives you a call to assist you further. So anyone who has completed this, right? Some people completed this yesterday, and I believe they sent a screenshot. But for today, anyone who completes this task for today and is registered under TenTrade will get gifts at the end of the day. So now I want us to cross over to the charts. Yes, indeed. I want us to cross over to the charts. And what we are going to be talking about is rather interesting, and I'm going to explain to you. What we're going to be talking about today, based on the topic, is multi-time frame analysis approach. I repeat, multi-time frame analysis approach, where you are going to be using different time frames on the same instrument. I repeat, you are going to be using different time frames on the same instrument, right? And this is going to help you to have different perspective of the instrument, and it's also going to help you to have what we call a low risk entry and then a high reward. Assuming, let me give you an example of the concept. Let me give you a concept of how this multi-time frame analysis works, the advantage, the major advantage of it. Assuming you do analysis, right, on like the weekly time frame, you can see we have the Euro USD weekly time frame. We're going to talk about this in a bit as well. But assuming you do your analysis on the weekly time frame, and then the weekly time frame, naturally your stop loss is like maybe 100 pips, right? And then your take profit is like 300 pips, right? I repeat, your stop loss is like 100 pips, and then your take profit is 300 pips. Now, with that said, you now drop down in time frame, because that is why we call it the multi-time frame approach, analysis trading. You now drop down to maybe the next time frame of the daily, or 4 hours, or 1 hour, or 30 minutes, or whatever the case might be. And then you now get an entry of about maybe 15, 20 pips. You get an entry of maybe like 20 pips. And that entry of 20 pips on the lower time frame, still based on the analysis that you did on the weekly, and then you get a good entry, and then it goes in your favor, and then you make 300 pips. Now you remember your stop loss now is 20 pips, and then you made 300 pips. That is 15 hours. That is why this multi-time frame analysis approach is very powerful, right? And it is one that you do not need too many trades. The one major problem of traders today is that they're placing too many trades, and you place too many trades, you already know what will happen, right? Confusion, you'll be able to manage all of them at the same time, and so on. The truth now is that you could have about 3, 4, 5 trades in a month. I repeat, 3, 4, 5 trades in a month, and you are good to go. You hit your target, right? Because you are taking like the best of the best of the best trades. And this is something that we need to put into consideration. Now, looking at what we have right in front of us, based on this Euro USD weekly, okay, I can see a comment coming in from Emmanuel Arewa, said, can we have a review of those trades we analyzed yesterday and how they played? Maybe we can do that first. Okay, no problem. Let's do that first, as Mr. Emmanuel suggested, instead of going to the multi-time frame analysis approach. And then also you can watch yesterday's recording on the YouTube. That's why it's good for you to follow us on all the social media handles. And of course, you'll get the replay of this one too later today. So we talked about the Euro USD yesterday. And as you can see, this is what we had yesterday. The market came back. Remember we said for Euro USD, we're expecting it to come back. And then when it comes back, what we're waiting for is what we're waiting for, the trigger on a pullback. So a pullback, and if you look very well, you can see I'm circling this area because this is the area it pulled back to. But if you look at this area, can you see any of those candles? Can you see the engulfings, the bearish engulfings? No, not really. Can you see the bearish pin bar or hammer? No, not really. And then look at what happened. It now did what? It has now pushed above this area here. Where is it most likely going to? If you look at it very well, this market is most likely going back to these highs here, right? You can see these highs over here. Sorry, my hand might not be that straight. Let me just adjust this. But it doesn't matter. That's why it's called an area or a level or a zone, right? So this is what we have over here. You can see the areas how it played out. One thing I would also tell you is that even if you took this trade yesterday and you had a small loss, right? Because your losses are meant to be well minimized, and then your profits are meant to be well maximized. So even if you had a small loss over here, it's all good. In this business of trading, you are going to have losses. I'm going to have losses. Everybody will have losses, and that is given. That is the truth. This is what we had over here for Euro USD from yesterday's analysis that you can see. The news, yes, look at what we wrote about here, because I was monitoring this yesterday. The news that came out yesterday at 4 p.m., it came out and it was negative as well. Oh, sorry, this is negative. It was negative also. So that means what? As the news was negative for the dollar, it was now a thing of buying. So you can see, I might need to check that again. Let me just quickly pop into that news and check on it again just for confirmation. The news from yesterday, Tuesday, yes, it was negative. And I'm going to show you that now. I'm checking the Forex Factory. It was negative. So as it was negative, that means that for Euro USD, you are supposed to be buying based on the fundamentals. Listen to this. For Euro USD, you are supposed to be buying, right? And you can see we're supposed to be buying, but over here we're supposed to be selling. So that means that it was counter to each other. And you can see it has broken to the upside now. So as it has broken to the upside, we do not do anything. We wait for further close as to what we are expecting in the market. GBP USD, this is what we have, right? You can see the levels that we marked out yesterday, how they're reacting. More or less no clean trigger, no clean entry from yesterday. Bitcoin is another one, and this one you can see, this one seems to be playing out. We took a sell at this area here, and you guys can see what we have in front of us. Let me just adjust this a bit to the side so that we can see more information. You can see this market was up, right? The Bitcoin has been up for a while if you follow the Bitcoin, the cryptocurrencies. And then from there, we had this place where the price came back and retested here. It retested here based on, let me show you what it is based on, because it's all about support and resistance at the end of the day. Here we have resistance. If you have a bunch of resistance here, we have some little support here. You have this here as resistance. You can see here as support where it went up. Here support where it went up a bit. Now broke to the underside, and then here it seems to be acting as resistance. So this is one that we took yesterday, and one thing I'd always tell people, if you are not good yet with your risk management, just for now, use 0.01 as your lot size, as your volume. And you can join Mr. Toby Okunoga by 6 p.m. later today, as he is covering the beginner session. So you could learn how to properly calculate your risk management. So you can see what is happening here. This is more or less in a little profit, and we're expecting it to drop all the way down to this place, right? I'm not sure whether we talked about this Bitcoin from the hourly time frame. I'm not really sure, but this is what I had mapped out yesterday, and you can see how it is playing out. But then today we're going to talk about the Bitcoin based on the multi-time frame analysis approach. I repeat, based on the multi-time frame analysis approach, we're going to talk about it, and you're going to see how this one here, based on this time frame, how it also confluences with the higher time frames as well. This is gold. You can see we talked about gold. Over here, we already drew the arrows and then they played out accordingly, but it did not give us any trigger. There was no trigger here. Now, the way some traders enter the market, and you can test it to know which one works fine for you. The way some traders enter the market, they could either be waiting for a trigger, and that trigger could easily be the price action candlestick patterns, the ones that we mentioned earlier. It could be either of the engulfings, it could be the pin bar, the hammers, or some traders enter on what we call touch trade. Touch trade simply means that when the market gets there, they enter, right? They're not really using price action confirmation candles or whatever the case may be. They pull the trigger. And if you were one of those that enter based on this, you'd have made some nice pips here. And you can see, and this is why support and resistance is a simple but yet very powerful tool. You can see from here, we have resistance, some resistance. You can see some little support over here, some little support over here, some resistance over here. This ones were messy over here, very messy. But then when it came back here, which is where it is still, you can see it is reacting to this area as resistance. So you could also be looking for sell positions here, but I can't see any trigger. Now, this is what your trading is meant to follow, like steps or rules. And we did that earlier, and I said do a screenshot. Number one, check the news. I repeat, number one, check the news for that day to find out if there's going to be some volatility, some fresh volatility that will be introduced to the market. So check the news for that day. Number two, map out your charts based on support and resistance from what you can see on the screen. That's number two. And then number three, you do what? You wait for the reaction, right? This was the reaction that we got here. You wait for the reaction before pulling the trigger based on entry. You can see this one, we got the reaction, nice reaction. Markets struggled a bit. And then you could have placed the trade over here based on what? Based on no trigger. But if you're using trigger for your entry, it will be the screenshots that you took earlier, the engulfings, pin bar, hammers, and even some other types of candles. You could have like the spinning top or dojis and so on, right? Just like over here as well, you could have done the same thing. So trading basically you need to create steps. Just like that equation that I showed you earlier, where I said something like 2 times 5 minus 4 divided by 10 plus 3 or something like that. Meaning that you don't just walk your way this way, but you know the pattern, you know which ones to focus on, right? Like BODMAS. That question has to do with BODMAS, right? For those that are, conversant with the maths, right? I know some of us might not really like maths, but I'm sure you like to count money. Thank you. The numbers have increased a bit. Let's do the needful. Let's add more people. Let's introduce this to more people. Let's bring them in and let us all learn together. So this is what we talked about briefly yesterday. And I remember yesterday, time permitted, we didn't have that much time. And I said, let's take it over to the Telegram group. So please, any other thing, let's take it over to the Telegram group as well. Make sure you register for an account. Reach out to the person that introduced you, and that person would help you to register for an account. And then you would also be added to the Telegram group where we can do more conversation, because we can't do everything in one sitting. Now, let's talk about the multi-time frame analysis approach, Mr. Emmanuel. I hope that's okay. We just did a quick one, and we can always go back, time permitted, and do more analysis, maybe based on day trading, because this is multi-time frame analysis, meaning that it could take a little while for it to manifest more or less. It might take a little while for it to start to produce those trades that we want to see, right? So if you look at what we have right in front of us, right, you can see this is the Euro USD. You can see I'm just scrolling back. This is the Euro USD from the weekly time frame, and of course, the weekly time frame gives us more information, which pans all the way to like the early 2000 and even 1990s and so on, since it's the weekly time frame. The weekly time frame simply means that each candle you can see is going to be lasting for a week. One candle, 1 week, one candle, 1 week. So that's how it works based on the time frame that you are using, right? So now I'm going to show you how we're doing this multi-time frame analysis. And from here, we're starting from the weekly. It's up to you. You can start from the monthly, start from the daily, whatever time frame you want to start from. You can start from the higher ones, daily, weekly, or monthly, and then start to work your way down. So if you look at this here, we have some little support here, some little support here, some support here. This was a bit messy, but it still acted as support as it pushed higher. You can see there was little support here. And then now as we're speaking, price is presently at that area, and is at that area based on a pullback. That means that as it has gotten to this place, now what we are looking for, as you can see, there's a reaction here. What we're looking for is a trigger that would help us to sell and take it back to these lows, right? Now, this is where we're talking about. You can see these lows from here to here. That should be about 1.09 to about 0.96. I think that should be about 900 pips. If I'm not mistaken, that should be about 900 pips. And we can also use our cross here to measure. I'm going to measure that here. I'm going to show you what we're talking about exactly. But as I said, that is, it's over 1,000 pips, sorry. That's about 1,200, 1,300. So let's say about 1,200 pips. So now, from where the price is all the way to the bottom, right, which was from the lows from last year, that is about 1,200 pips. If you're going to place a trade based on this weekly time frame, your stop loss might be maybe 200, 300 pips, right? Yes, the higher the time frame, please note this very well, you can write it down. The higher the time frame, the higher your stop loss most likely is going to be, right? But then some traders can decide to do something. Let me clean this up. Some traders can decide to drop down to the next time frame of daily to see whether they can get an entry to sell from the daily time frame. You can see the daily time frame now has given us some more clarity. Okay, I have a comment, sorry. Okay, Mr. Manuel said it's okay, so okay, great. Now you can see we have more clarity here from the daily time frame we have dropped down to. And if we look very well from the daily time frame, this was support where the price went up. And you can see it came back here, struggled. And you can see this is where we are now. So where we are now, if you get an entry over here, trust me, this entry is going to be smaller based on stop loss, it's going to be smaller than the weekly time frame, and then we can take it down. You can take it down to here, maybe a conservative take profit, and I put here as a conservative take profit using this red horizontal based on what it has acted. It has history, let's put it that way. it has history. Over here, it acted as support. It acted as resistance, as support here again, support, because support is where price goes up, where price goes up. And then here, it broke the support to the downside, and then it came back here and did what? It acted as what? Acted as resistance and then dropped down. And then did what? It came back here, it struggled a bit with this area and then pushed higher. So that means that you can as well decide to take out some profit or all your profits over here, or wait and see if you can get to this lows here. Don't forget, this lows is about 1,200 what? 1,200 pips profit. And let's assume that your take profits, your stop loss here was about 150. So you can see we have reduced it from the weekly to the daily. So your daily stop loss will be 100 or 150 pips compared to the take profit of 1,200. So you can see it is getting much, much better. But then let us continue with the multi-time frame analysis approach. And one thing I'm going to tell you guys now is this. Let me say this. I'm going to say this carefully. Listen to this carefully, please. The ultimate trader is one that can have a stop loss of this small and have a take profit. Let me use my two hands for the take profit. I have a take profit of this large. I hope my picture is not blocking the chat. Please let me know. I hope my picture is not blocking the chat. If it is, I could turn my video off. Please let me know. I remember that happened yesterday where my picture happened to be blocking the chat. Okay, thank you. Mr. Raymond said, no, it's not. Mr. Abdul said, no, it's not. Thank you. So I just needed that for confirmation. Okay, great. Awesome. So now you can see what we have here. Please, guys, you can do a screenshot. Please do a screenshot of whatever we push out. You can rewatch this video on the YouTube channel. That's why I'm trying my possible best not to make it way too lengthy so that we can always be able to watch it once or twice or even 3 times. That is on replay to get more information. Of course, that more information would help us to understand what we're talking about much, much better. Okay, thank you. So now, based on this daily time frame, I'm going to do something. We're going to do something further. We're going to still drop down in time frame. We're going to drop down to the 4 hours time frame. Now you can see what is happening here. Okay, Godwin Sammy said not really. That's my image. Let me know. You said not really. Let me just see whether I can shift it. Hopefully I can shift it and it obeys what I am trying to do. So I'll shift it to the side. And then I think I have shifted it to the other side. I stand to be corrected. I can't see how it looks like from your own system. But then let's continue. Now, if you look at what we have right in front of us, a downloadable, recordable recording will be fine. Okay, you could talk to your representative with respect to that. Please, the person that introduced you and invited you for this training, you can always reach out to the person, or when your 10Trade representative, your account manager on that 10Trade, when he or she reaches out to you, please discuss those things further, whether you want the recording or whatever the case might be. Raymond said, how do you know the number of pips you are trading because you did not calculate it? Okay, great. I did not calculate it. Thank you for that. That's a good question. I was just using my own experience, right? More or less. I'm going to show you how to calculate it now, right? Just a quick one. Let me just zoom in so we can see these candles much better. Let me just zoom in. I'm going to pick a candle as an example. Right now, picking this candle, let's assume this candle is the entry. This is not a significant candle. I'm just using it as an example. So let's assume this candle that we see over here, this one here, I'm just putting an arrow. Now, this is one we want to use to enter. So when we enter, maybe based on the close, we enter here, your stop loss is going to be at the other side because you are what? Because you are selling, right? So because you are selling, your stop loss is going to be at the other side of that candle. So from here to here, right, will give you the amount of stop loss. And that's why I later use the cross here. Like I introduce the cross here again, it's on your chart. whether you are using the mobile device or whether you are using the laptop or whatever the case may be, you would always find the crosshair. So I've clicked on my own and I can bring the crosshair to this point of entry. Remember, this here is a stop loss. If I click on it and hold it down and drag it up, it will give me the amount. Listen to this and look at this now. It will give me the amount of stop loss that I should be using. If you look at the center, it's giving us 393 points. 393 points simply means 39 pips and 3 pipettes. 39 pips and 3 pipettes, which is listen to this guys carefully, which is approximately 40 pips, approximately 40 pips for your entry. Now look at it now. You can see the advantage of this multi-time frame analysis approach. Our take profit remains the same, even though it might take a few days or weeks or whatever to get there, but it still remains the same at 1,200 pips. But then we are dropping down in time frames from 100 to this to that, and now we have 40 pips on this 4 hours time frame. What does that mean? That means that we stand a chance of getting an entry on these 4 hours, right? I repeat, we stand a chance of getting an entry on these 4 hours for 40 pips, and then we run it up to 1,200 pips, which is what, if I'm not mistaken, that should be about 30%. Meaning that if you're risking 1%, you have just made 30% on that one particular trade. Isn't that fantastic? How many of us wouldn't mind 30% returns on just one trade? One trade. You can see that this multi-time frame analysis is so powerful. It's a great one. It's a good one. It can help you to do what? To fine-tune your entry. Fine-tune your entry. Now you can see we're still on the 4 hours time frame. What if we drop down some more? Let me just reduce the size of this. What if we drop down some more to 1 hour? At 1 hour, look at what we have under the 1 hour. I'm going to explain what we have. Remember, we looked at this on the 1 hour from earlier, where we said you didn't get the entry. And then if you remember, from this 1 hour here, this is it, 1 hour. Remember, we drew this line here saying that most likely the price is going to that point. So what if the price is going to that particular area? What if the price is going to this area here? And we can use a horizontal line or we can use a rectangle. The choice is yours. Anyone you use is still acceptable, but most times traders like myself will use like the rectangle to show the area properly, because the horizontal line is just more or less a point. It can't show you the area. So now look at it this way. Look at this way quickly now. What if the price from here gets to this point here, right? And then it gets to the point here, what we get for our, oops, sorry, I deleted all of that. What we get for our stop loss on this 1 hour time frame. Now, of course, you know, on this 1 hour time frame, it is going to be lower than the 4 hours. And the 4 hours, we got 40 pips. That means that by the time the price gets here and we get our trigger, more or less, our stop loss will be what? Our stop loss would be 20 pips. Now, don't forget also, I hope you guys are enjoying this, because this is very powerful and it's going to change your mentality. Why? Why is it going to change your mentality? Because if you have, listen to this carefully, guys, if you have like 3, 4, 5 losses back to back, that's 3, 4, 5 losses back to back, but you make one winner at 20 pips with the same take profit of that 1,200 pips, right? That is now what? That is now a risk to reward ratio of 1 to what? 1 to 60. I repeat, it's now at a risk to reward ratio of 1 to 60. Which bank can give you 60 ROI, return on your investment? Meaning that you're risking maybe 1% and then you get 60%. Which bank is offering that today? But then you are able to get this on just one trade because you took your time and then you broke down the analysis, multi-time frame, like a top-down approach, from a time frame of like weekly down to daily, 4 hours, 1 hour. Now, I will tell you that you are permitted to drop down to maybe 30 minutes or 1 hour, but don't drop down way too low, because you might be saying to yourself, oh, let me drop down to the 5 minutes or maybe the 1 minute time frame so that I could have a stop loss. Maybe you're looking for a stop loss of about 5 pips. You're looking for stop loss of 5 pips, and then you're going for the same take profit of 1,200. If I'm just saying a big if, but if you could do this, you could carefully do this, that means that you've made what? You've made over 200 ROI. 200 ROI. Now, let me tell you something. The highest I have seen in the history of my trading was a trader that did 140. And that trader that did 140 R, that is return on investment, that trader was doing some good numbers, but 140 was the highest, right? 140 was the highest. But then you can see if you can do 200, that will be some serious numbers. Mr. Adams said 5 pips and is laughing. Yes, it's very doable. As it's very doable, you need to be what? You need to be well detailed in your analysis and make sure that everything is falling in line. I repeat, everything is falling in line based on your major time frame that you use, that you did your analysis from. Let me explain this part quickly, because I want us to also look at the Bitcoin. I want to explain the Bitcoin at least, even if it's just 2 or 3 of the multi-time frame analysis approach, because when you are doing one, you're breaking it down from the time frames from daily or weekly, daily, week, daily, 4 hours, 1 hour, 30 minutes, or whatever. You're breaking it downwards. So it takes a little bit of time for us to discuss one, which is just the Euro USD we've been talking about for a while now. And on this Euro USD, let's go back to the weekly time frame. You can see this weekly time frame is more or less a downtrend, right? It's more or less a downtrend. If we also go over to the daily time frame, you can see it's a downtrend as well, which is good for us. So we have the weekly down, daily down, but then look at this 4 hours. Look at this 4 hours. What's the 4 hours looking like? The 4 hours, if you ask me, and of course it's plain to see right in front of us, the 4 hours is an uptrend. Interesting. As the 4 hours is an uptrend, that means that we're looking to do a counter entry, a counter trend trade. And counter trend means that you're going in the opposite direction. So you can see that this one is well acceptable, because your major analysis done on the weekly, it's pointing to the downside. So in as much as this one is what, as much as this one that we're doing analysis from is, I'll call it a CT. CT means counter trend. It's more or less a CT trend, a CT move, because you want to sell in an uptrend. That means that you're going against the trend. But you have the back, listen to this carefully. You have the backing of the weekly time frame, and then besides, the price is now at the area of interest. That area of interest is after you have mapped out your chart. I hope this is making sense to you. Don't worry, it's going to be a gradual process. You have room to ask questions, and then we'll see what we can do for you. So this is a quick one on the Euro USD, and we took a little bit of time to explain this to us. I want us to at least look at the Bitcoin. We looked at Euro USD, which happens to be a currency pair. Let's look at a crypto, the father of all cryptos, which is Bitcoin. Maybe if somebody wants you have a commodity, maybe it is crude oil, or maybe it is even gold. Maybe we could look at the higher time frame, multi-time frame analysis approach for any of them. But this is the Bitcoin here. And this Bitcoin, let me just show you some things. This is the daily time frame. We said from the daily time frame. Now we said it's a multi-time frame analysis approach. So if you use daily, 4 hours, 1 hour, or even if it is daily and 4 hours, it's still okay. If it is the 4 hours and the hourly, it's still okay. If it is the daily, daily 4 hours, hourly 30 minutes, it's still okay. There's no limit to the number of what's the name of time frames dropping down that you could do. I can see Mr. Adams said US oil. Okay, we see whether we can do US oil with time permitted, right? But let's continue now. If you look at what we have right in front of us, this is a no-brainer. From here all the way down, the trend is a downtrend. I repeat, the trend is a downtrend. It's always good to identify the trend before you start to do what you need to do, which is look for entries in that same trend. You can see here, this was a support, the price went up, and then after it broke out, it came back here and then reacted to that same area as what as resistance and went down. So you can see what is happening here. Price is more or less at that same area of interest, Notwithstanding, it could still push higher, who knows, and hit this place well enough. But no matter what, in this area here where price is, it's very much at the area of sellers, meaning that they want to take it back down to these lows over here. They want to take it back down to these lows here. Don't forget the time frame is the daily time frame. We're looking at the daily time frame. If you look very well, the daily time frame. So if you look very well, if we decide to do our cross here again, like we did for the other one, now I will have something for you. I have an assignment for you. Yes, I just thought about this now. And I said, let me give you this assignment. Let me mention it now before I forget. I'm going to mention it now. With everything we've talked about now, based on the recap from yesterday, and especially today's multi-time frame analysis approach, I want to give you guys, what's the name? An assignment. I'm closing my eyes so I don't forget it. And I quickly dish it out, right? Now, this is the assignment. Based on what we've discussed today and even yesterday, right? This is live market analysis, meaning that you are not supposed to be a spectator. You're not supposed to be just listening. You're supposed to be practicing. Do we understand? So I want you to do something now on your 10 trade account, whether it's the demo account or the live account, right? Because you need to be trading. You need to be trading right now. So on your demo account or your live account, whatever the case may be, let us know, right? Please don't forget, as a disclaimer, you can lose money. So please always ensure that your losses are well minimized. I always tell people, no matter the amount you're using, whether you're still struggling or you're new, stick to 0.01, right? Very key, very, very important, right? So what we have in front of us, as we've just said, this is the Bitcoin from the daily time frame. And then we can even do something further, just like we did for Euro USD. We can drop down in time frame to the next one of 4 hours. Interesting. Look at this. The daily is telling us that it's a downtrend, but then the 4 hours is telling us what? It's telling us that it is an uptrend, right? Now, this is why I said, because now things are getting clearer. It's an uptrend over here, as you can see. But as it's an uptrend, for you to sell, because it is selling that you're interested in from the daily time frame, for you to sell, it means that you are going against this trend, which is what? Which is a CT trade, a counter trend trade, right? And you can see what we have over here. We have this area here where it has acted as resistance, right? So peradventure, if this Bitcoin should push higher, I'm just saying from this time frame. Remember I said it also tallies with that one that I took strictly from the hourly time frame. That hourly time frame is strictly based on day trading. When it comes to day trading or even scalping, I always tell traders, stick to only one time frame. Keep it very simple. So you need to understand how you're going to be looking at the market, just like that BODMAS equation that we gave you. You look at it and you know where you're starting from and so on. So this is what we might be looking out for on this 4 hours time frame. Either it comes back to test this as resistance, you get your entry, and then you take it back down. Don't forget, you're taking it back down all the way, right? Just like the Euro USD, where we had about 1,200 pips. So you're looking out for this, an entry here. Or let me show you something that I could also be looking out for. Let me clean this up. We have these lows over here that are representing support. So we can as well be looking for the price to go back to this area and then maybe bounce or maybe even break. But then look at this area here as well. This is an area of resistance, right? This was former resistance here. And then after it broke out with this big candle, it should now act as support, right? And mind you, these areas that we're mapping out now, they're also known as trouble areas, because the price could get back to this place, and as a trouble area, it could push higher, or you can as well get back to this area here as a trouble area and push higher, right? But then you know our ultimate goal is for price to go all the way to the end over here. And this is something that traders are not also conversant with. They do not know how to hold trades for a long period of time. I repeat, traders today do not know how to hold trades for a long period of time. Meaning that when they, assuming you are buying now and you're buying and it's going in your favor, but by the time you see a drawdown, you panic and then you get out and close it for a small profit, only for it to continue to push higher. The price is going to go up and it's going to go down. That is the cycle. That is the pattern of price. It's like waves in the oceans. You see waves, the way waves moves, right? The waves will, first of all, you have a big wave and then you have a small wave. You have a big wave, a small, and then you have a mighty wave, and so on. That means that the price will keep on going up and down, up and down. But you need to be able to understand what you are doing and be able to still, stay in the business, still stay in that trade, even with the little drawdown pullbacks that you are having, right? Please pay attention, very key, very important. And this is the 4 hours time frame. Let's drop down to the hourly time frame. Don't forget, as we're dropping down in time frames, I repeat, as we are dropping down in time frames, right, it is helping us reduce our stop loss. I repeat, it's helping us reduce our stop loss. So this one was placed. Let me show you this. This is the same BTC on the hourly. This was meant to be an intraday play, meaning that you can see the take profit was here, final take profit was here because of the way we did the entry. But based on this one, that's from the multi-time frame analysis, you can see our entry. Let me show you something. The entry was based on this, as you can see, resistance, resistance. You can see everything over here, how the price is reacting over here, and how it is acting here, where it is presently, right? And that is why on this one here, you can see the same thing has been mapped out. Remember, we want to sell, we have to wait for price to get to the areas to sell. So this one is a good area to enter the market to sell, as you can see. But then if this area fails, remember your stop loss, if you enter here, your stop loss will be slightly above these candles, or the candle you're using, the exact candle you're using to trigger, whether it is the engulfings or whatever the case might be. You can as well put it here, with your take profit being all the way to this lows over here, right? So this could be one entry that could work, or we could as well go back to these highs here. Now, we talked about it not too long ago on the 4 hours time frame. Can as well go back to this area here. If it goes back to this area here, look for another like price action candle. Don't forget, this is hourly, so your stop loss will be much smaller. You can get in and then hold on for a while and get a much bigger take profit. This is something that is very important. We're going to still do something as we progress, not today. It might as well be next week. We're going to still have this multi-time frame analysis approach in details, where you can take advantage. The good thing about this style of trading is that, number one, you don't need to be staring at the market on your charts all the time. You're not a scalper. A scalper is someone that is using maybe 1 minute, 5 minutes, or 15 minutes time frame. I'm sure those that have scalped have not used 1 minute, but I know some traders that use 1 minute, right? So depending on you have an understanding, like what we've talked about now, you have an understanding of this, you can take advantage. And as I said earlier, we're going to still have a full session, right, where we're going to talk about this at length. I'll give you some more rules for you to work with. But I want to believe that it is making sense. I really want to believe that this is making a whole lot of sense. Let me clean this up, and I'm going to talk about one more, gold, and then we'll look at the US oil for Mr. Adams that asked. And also, please, as you are here, if you have any questions, let us know so that we can analyze together and see what we can make out of the market together. So here is the gold. You can see the gist of everything from what we're talking about. I'll just explain this gold quickly. For this gold, the direction is up. So this is an uptrend as we have over here. But then in this uptrend, if you look very well, we have this area here of resistance, and a little resistance here. You can see the market is reacting to this area. So all we need to do, this is a counter trend trade as well, based on price being at this area of resistance, right? So take note, this is a counter trend trade from the weekly time frame, this weekly time frame. So if you get an entry here on the weekly, you need your stop loss to be very big. And this could easily be your take profit area for the price to drop down in your favor. This could easily be your take profit area where you have this here as support, and resistance. Now, it's always good when you look at a particular area and that area has acted as support and resistance, it starts to build confidence in yourself as a trader, right? So this is what we have over here. based on this goal. I can see some comments are coming in. Let me just go over them. Kelechi Chibundu said, what's the assignment you intended giving us? Okay, the assignment is this. The assignment is this. On your 10Trade account, whether it's demo or live, what we've talked about here, map out your charts. You can post your chart in the Telegram group. I believe you guys are part of the Telegram group, or join the Telegram group. It's free. Yeah, there's a free Telegram group, and there's one for those that have funded. That one, you get some extras like market analysis session, you get some signals and so on, some other benefits to that as well. If you're interested in that, you could let your representative for 10Trade know, or the person that introduced you to this, let that person know as well that you're interested in the funded Telegram group, where you get some extra assist as well. So talk to them and let them help you to connect there, especially if you funded, I believe it's a minimum of $100 or so. Okay, so that's the assignment, as Mr. Kelechi asked. So everybody, that's the assignment. The assignment also includes this higher time frame, multi-time frame analysis. Let us start to implement. Let us start to engage ourselves. Let's do this little assignment and post them in the chat. Let's create that form of engagement. And that's what we said earlier. Post this on your WhatsApp status, post on your Twitter, so that when we're having this session again, whatever session we're having later today, with Mr. Toby Okunoga, post it, get a lot of people to join. They're going to learn, especially if you have people that say they're new, they want to learn, let them join later today. And then tomorrow in our live market analysis session, where we're talking about something or looking at the market to see what we can take advantage of, please also do what? Also post it up today, later today, and tomorrow as well, and get people to join us. Now, there's something I want to quickly do before I even drop down in time frame. You can see this one, we are just on the weekly time frame, and we said we would like to sell over here. That means that if you drop down to the daily, it gives you more information on where it is over here. This looks like a head and shoulders, this section here. I don't know whether some of us know the head and shoulders pattern. This looks like head and shoulders pattern, and it's coming back to test that, right? So you get an entry here, you may have a smaller, most likely have a smaller stop loss compared to the weekly. You get to the 4 hours, you can see what we have over here. You also get a smaller stop loss by the time you are dropping down in time frames as well. And this is for the gold. This is about 10 minutes after our 1 hour marker. I'm trying to see how gradually we can not take much of our time, so that this video is not too lengthy for you that might want to watch it again, or for those that were not able to attend this live that might want to watch theirs. So it's not too lengthy. Okay, I can see some comments coming in. PS Audu said making sense. Thank you. Wumpini said Euro JPY. Okay, we'll try to look at Euro JPY in a bit. Let me know the time frame. Is it from the scalper, intraday, or whatever? Let me know the time frame, then we'll see what we can do. And remember, Mr. Adams also mentioned the US oil. So let's quickly jump into the US oil. This is USD JPY, and as well talk about it. But let me see. I should be able to get my crude oil from here somewhere. Okay, this is the crude oil here. Let me just move it to the side. Okay, so that's what we have here. Okay, need to extend this daily. Okay. I think this marker was from the previous one, so let me delete this. I don't believe we have anything on the charts now. Okay, so this is the US oil. I'm going to do my analysis fresh on the US oil. You can see there's nothing drawn on the chart. First thing that jumps at me on this chart, you can see I'm looking at it for the first time with you guys. So this is why it's called live market analysis. First thing I can see is that the trend is down, and I'm sure you guys will agree with me that the trend indeed is down. Another thing I can see from my own experience, if I'm going to map out this chart, the next thing to do is to map out the chart. Oh, I forgot to mention, we haven't checked the news for today. We have not checked the calendar for today. Let me clean this up. Let me just quickly show you the calendar for today. I remembered, but it kept on skipping my mind over and over. So let's look at the calendar for today. Today is Wednesday, February 1st. Oh, apologies, everybody. Happy new month. I forgot. I should have said that at the very beginning. It's never too late. Happy new month, everybody. Sorry about that. Okay, so this is what we have over here, as you can see, February 1st, which is today. And then if you look very well, for today, all the high impact news that we have coming out, they are all what? They are all based on the dollar. Let me ask you guys this question so that we have a better understanding of how to look at the market, especially as this is the live market analysis session. As we have everything for today, high impact news for dollars, the non-farm employment change. This is the key news that comes out before Friday's unemployment rate. As you can see, this is Friday from here. This is the one that gives us a rough idea what the data might be for this. We have the Joe's job openings, and we have the very, very important one, the FOMC, that's the Fed, later this night by 8 p.m. Trust me, based on the interest rates and so on, this is going to be heavy going down to 8 p.m. So even if all this news at the very beginning, you don't really see any much reaction to them, most likely FOMC, for those that know FOMC, you know it packs a lot of thunder when it drops. You might as well have some strong volatility that occurs around the 8 p.m. So I think I have some comments coming in. I was about to say, based on all of this news that we have here, right? Based on all of this news that we have here, it's going to be very impactful. Let me put it that way. Let me use that word. It's going to be very impactful for USD, meaning that the movements later today might be very heavy to the upside or very heavy to the downside, right? But we don't know whether it's up or down. But what we do know, most likely, is going to be very heavy at the end of the day. So I would advise, if you don't have any clue, sit today out, right? That is one thing that traders do not realize. They want to trade every day, but it's not about trading every day. There's some days that you don't need to trade, right? Because of what might be happening. Let me put it this way. This is like the part where in a scary movie, I'm sure you've watched a scary horror movie before. This is the part where the music changes. Once the music changes, it is now best for you to what? To just relax, lean back, and wait for what is about to happen. Okay, thank you. Mr. Manos said, happy new month. Mr. Adam said, OPEC news all day. Yes, OPEC news all day as well. That is tentative. You don't know when exactly it's going to come out, right? But since you mentioned OPEC news and you mentioned US oil, so you should know that we should have some volatility today for the US oil. So let's quickly do our multi-time frame analysis approach based on this. And you can see this is the daily. So I'm going to do some drawings over here. On this daily, I'll use my rectangle, right? Just by eyeballing it, this is what I can see over here. Just using my eyes, I can see this over here, and I can as well adjust this. The beautiful thing about live market analysis is that you get to see forehand how we trade. You get to see forehand how we analyze. So this is like watching the charts over my shoulder. Look at what we have here. This is a form of support as the market went up. This is a form of support as the market went up. And then after it broke out to the downside, look at what we have here. It came back and acted as resistance and then dropped, came back, acted as resistance and then dropped. It has already acted as resistance and seems to be dropping. Do not be surprised if this crude oil, US oil, it drops further down to about maybe $70 or just lower than $70 over here, right? So for this daily time frame, right, the move has already occurred over here, right? But then let me drop down. I'm going to drop down to the 1 hour based on the intraday, because since the move has already occurred, now let me also show you something, because you might be lucky, and this happens. You might be lucky that the market pulled back again and gives you another short over here. And if this is going to happen, all right, where you're expecting to now drop down to these lows, if this is going to happen, then you can now drop down in time frames to look for a discounted price when and if it gets back to this point. Because I can't tell you if it's going to get back or not going to get back. I don't know. But if it's going to get back to this point, right? So that resistance, we can drop to the 4 hours, meaning that we're waiting for price to pull back to this area here. But then you drop down to the hourly. And don't forget, the main purpose of you dropping down is so that you can get a discounted entry, meaning that your stop loss will be much lower. Thank you, Mr. Golden Sammy. Mr. Golden Sammy said, Happy New Month to you and everyone here. Thank you too. Happy New Month to everybody. Now, from what we just talked about based on the crude oil, where I said it has already occurred, right? It has already occurred. Only if you're expecting it to push higher again, and then you can get a fresh opportunity over here to maybe even drop down with time frames of 4 hours, 1 hour, or 30 minutes. Please do not drop lower than 30 minutes. It tends to get a bit noisy in this scalpers region. I'm not saying you cannot scalp, but it tends to get really noisy. And as it gets really noisy, it's prone to a lot of errors, right? Because you need to also be fast and so on. So please take note of that. It is very, very important. So I believe, oh yes, I remember somebody mentioned EURJPY. Let me just let's quickly look at the EURJPY. Okay, I believe I already did EURJPY. I'm going to do this. I'm going to do this since person mentioned EURJPY. I'm going to do this and then stick to the intraday. And I'm going to show you something very nice, right? You can see I've already done the mappings over here on this chart. I've drawn my levels where over here you had like a form of resistance. Over here, it breached higher. We look at this here again, form of resistance, form of resistance, form of resistance. And then look at what happened here. This is even okay, so I was about to say you can't see me, but now you can see me. I'm smiling. Why am I smiling? I'm smiling because there was already an entry here. Can anybody see the entry on this EURJPY? This is an intraday level. It's already moving in your favor. You know your stop loss would have been here above this. Your entry would have been here. It's already moved in your favor, and then you can wait to see whether it gets down to these lows here. These lows here, you can see you have a form of resistance, you have a form of resistance, and yet to be tested as support. So this would be a good place for price to get down to. And you can see the risk to reward is actually very, very good. So who can tell us, who has an idea? We're going to be rounding up within the next few minutes. Who has an idea the price action candlestick pattern formation that we have over here that has given us our entry to sell? You can see we're already late to this. If this is 1 hour, so this was like 1, 2, it's about 2 hours ago. But if we had looked at this like 2 hours ago, we might have been able to get the entry. Can anybody help us out? If nobody, let me help you out. I'm going to first of all clean this up. And once I clean it, I'm going to now increase the size. As I increase the size, you should be able to see the candle. This is the candle in question over here. And guys, we're rounding up now. This is the candle in question. This candle is what? It's a bearish pin bar or a bearish hammer, which you can see has been triggered and then is already in pips. This is like already like 1-to-1, right? Meaning that if this here was like maybe 15 pips stop loss, right? This should already be in 15 pips profit already, right? And you are still going much lower. So you can see that this trade is actually a good one, but we have missed this boat over here. So I want to round up this. I want to round up this because of time, so that the video is not too lengthy. For those that want to watch this on a replay, you can feel free to watch this on a replay on the YouTube. Don't forget, please follow TenTrade on all the social media platforms on YouTube, Instagram, Twitter, Facebook. The links have been posted above. You can get in touch with your representative as well to get the links. If you do not have a TenTrade account, please reach out to your representative, the person that invited you to this training, right? Please reach out to the person, and the person would assist you in registering. Okay. I can see Mr. Adam said the same hammer on CAD yen. Let me just quickly flip to the CAD yen. Let's look for the CAD yen quickly. He said the same thing on CAD yen. Oops, sorry, that's a mistake. Same thing on CAD yen. Let's see what I can get the CAD yen. Oops, mistake. Okay, this is the CAD yen. So you said you said I really entered. That does that mean you entered? Aha, beautiful. Beautiful. Let me show you this quickly, guys. I think I even prefer well, if I quickly show you something, you can see all these levels here are all representing what resistance, and then you had this over here, and then you pull the trigger on this. Stop loss is above here. You can see it's dropping lower a bit, and of course it's a good one, similar to that Euro JPY that we're looking at as well, right? So this is what you're supposed to do. You can see you're even giving us some instruments to look at. They're giving us the CAD JPY, Euro JPY, US oil, and so on. You also do that as a little assignment for yourself, right? Yes, you can more or less call this a sort of double top as well. This one is also here, just in case it pushes higher, right? But then as we're rounding up now, please conduct the little assignment that we have given you. Make sure you're doing this on your 10 trade account and post it up in the Telegram group. That is for everybody. And if you want to graduate to the group that has signals, market analysis, and other goodies for you, please, you can reach out to your representative, reach out to the person that connected you. You are meant to fund your account. I believe it's a minimum of $100, which you're going to be trading, by the way. Yeah, so this is a case of you are eating your cake and having it at the same time. Yes, this is a case of you are eating your cake and having it at the same time. So please pay attention to that. And then, of course, any other thing that you need, any assistance that you need, let us know, and we'll see what we can do for you. We are here for you on a daily, right? I was about to say on a daily basis, but not 24 hours. The market is 24 hours, but of course, we are not available 24 hours as such. 24 hours is only when you go over to the website, and then I believe the support there should be 24 hours, right? But reach out to the person that gave you the link to join us, and then also your representative from 10 Trade, your account manager, he or she. When you're contacted, you can also ask questions, and then we can assist you further. So anything you feel you need, if you want to join the Telegram group, the free one, let us know. You'll be added. If you want to join the one for the signals, market analysis, and some other goodies over there, I believe it's a minimum of $100 you need to fund. And then if you need a one-on-one training or whatever the case might be, let us know and we'll see what we can do for you. I hope this has been helpful. Don't forget, we are going to still do this the more, and I'm talking about the multi-time frame analysis approach. We're going to do more of this to help everybody out. Please, we need to bump up the numbers. Please, on your social media, you can post the link, as we said, against tomorrow's session, and then also invite a friend. We got about 20 people there about today, but tomorrow, please, let's bump it to about 50. We need to hit some good numbers. So I want to say thank you, guys. I'm going to stop the recording now. It's not way too lengthy for you on a replay and for those that were not able to join us today. So thank you, guys. Thank you. I can see you guys are signing out. I'm going to sign out as well. But we'll see you tomorrow. Don't forget the little assignment that we gave you. Your own charts, the charts we've done, and your own charts, whether it's CAD JPY, Euro JPY, or whatever the case might be. It could be silver, it could be any of the cryptos. Do it and post it up on the Telegram group. Let's have some more engagement, and we'll be there to assist you as well. Okay, thank you, guys.